Well, hopefully you had a great, happy 4th of July. Enjoyed it with your friends, your family, and all that. And we thank you for being our friends and joining us daily in the National Real Estate Cafe, where we give you your daily market updates.
Yeah, and for the next few days, I'm going to be leaving you with this guy because I'm going to go hiking up in the backcountry up in Yosemite, going to Half Dome for a little bit. So enjoy your time with Mr. Getling here.
Yeah, so Mr. Halftime, going up Half Dome. So we're going to go over something that's really important because you've been hearing a lot about
the Brexit. And it has nothing to do with breakfast. It has to do with the British, though.
Yeah, and he might lose his breakfast trying to climb Half Dome, though.
We'll
you
see.
Watch and see.
We'll see.
All right, first chart here, man.
Yeah. So the Brexit. What is the Brexit? The Brexit is that the Europeans, specifically the UK, gave the consumer or the population the opportunity to vote to leave the European Union. And the interesting piece is Great Britain doesn't need the European Union, but the consensus was that the European Union needed Great Britain. And so this was a very big signal that not the big countries in the world maybe don't want to continue down this let's finance others lifestyle kind of situation.
Like Greece and Portugal, Italy, what's going on? Yeah, okay.
You know, so the question now is, do you have contagion, and do you have other countries decide to leave the EU?
And there's others that are thinking about it, without a doubt.
Right, like Italy.
Yes, I like that. Okay, so if you look at this chart, we want to explain two things. I'm going to explain the first part where the crossover. The blue line is the stock market. The red line is the stock market, I apologize. Red line is the stock market, and the blue line are treasuries. In most cases, they tend to follow each other, as you can see. But at one point, you see a crossover towards the end of March, beginning of April. At that time, the stock market was going down and interest rates are going up because the Feds announced that they were going to probably raise interest rates 5 times throughout 2016.
That was incredibly aggressive, by the way. You know, when they said that, that was unrealistic.
Yeah, we didn't believe it. We both said maybe 2, maybe 3 times. So basically, all of a sudden they were getting signs that the global economy was slowing down, especially China, falling oil prices, our global economy, our GDP wasn't hitting all marks.
Are you kidding me? The first quarter was atrocious. It was 0.8, and now it's been revised to 1.1.
Yay. So barely keeping up with inflation. So bottom line is at that point, everybody felt very comfortable that the Fed couldn't raise interest rates, and that's why stock market improved. That's the red lines, and treasuries went down because they were. It helps. They weren't worried about interest rates going up.
Yeah, and again, the yield in the rest of the world at the same time kept going down, down, down. You had Japan. Japan said they were going to go negative interest rates. The German Bund kept getting cheaper and cheaper. And at the end of the day, people are looking for yield, right? Financial institutions, hedge funds, and all these people want return on their money, and they're looking for yield. If they can't find it in the rest of the world, they're going to find it here. They feel like there's no risk in letting us borrow money here in the United States, so the 10-year note is a great place to put it. Now, what happened at the Brexit? You see that big Richter scale all the way at the end where everything just falls off the edge? Tell us a little bit about that.
That's basically when it was announced that basically Britain was leaving the European Union, which kind of freaked everybody out. They didn't think it was really going to happen, and that shocked the world, and everybody started putting money into U.S. Treasuries because that is a fixed asset that they felt is safest.
Yeah, completely unexpected. I talked to some of the best financial planners in the nation, and it was completely unexpected. Nobody was expecting what happened. And so you see a knee-jerk reaction, a fear reaction for the first 2 days. The stock market was down 900 points in 2 days, Don.
And you can see that we've already rebounded. The reason being we've rebounded, and maybe it's a little overreaction. There's some profit taken, obviously, but it may be a little overreaction because, if you compare how our economy is doing to other economies, we look pretty good.
I read a lot of articles right after this 2-day drop, and almost all the most intelligent people in the world said it's a buying opportunity. Virgin, Sir Richard Branson's companies lost 30% of their value overnight. Do you really think those companies failed overnight? No, they were still great companies. They're still profitable companies. So when things like this happen and they lose their value, people come in because it's a great opportunity.
Right, and that's why we love doing these on a daily basis. So you really understand what all this means so you don't panic. So you know to go talk to professionals because they'll tell you, don't panic, there's a buying opportunity. Our financial planner, instead of panicking, actually calls and go, hey, we have a buying opportunity. He doesn't worry about where our other stocks are. He'll know they'll come back. Instead, he lets us know that there's a great opportunity to take some potential profits down the road because the market's down.
Yeah, when things like this happen, you might want to do one of those like You know, just don't listen to anything. It's just too much noise. Ignore the noise. Stay with your plan.
All right, you heard it right here on the National Real Estate Cafe with Don Gelli and Gino Fronte. You get these texts right to your phone by texting NREC to the number 58885. That's it.
It's out on our website too, nrecafe.com.